What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to break down the current harmonic setups playing out in the markets and what the patterns are telling us going into next week. We've also have a big week ahead of us on the economic front, starting with the ISM manufacturing PMI. This is going to give us insight into business conditions in the manufacturing sector. Then we'll watch the JOLTS job openings report. This is also going to give us a key read on labor demand and hiring strength. Midweek is going to bring us the ISM services PMI. This is a gauge of activity in the services sector, so you got to think about like healthcare, finance, and retail. Then on Friday, all eyes will be on the non-farm payrolls report. This is going to show how many jobs were added or lost in the economy, along with the unemployment rate, which is going to tell us how many people are actively looking for work. So this is going to be very important, specifically the non-farm payrolls and the unemployment rate. This is going to could have a major impact on market momentum, especially with the Fed closely watching the labor and inflation data. So if you like this type of content, guys, and find value in this breakdown, don't forget to like the video, drop a comment with your thoughts, and subscribe to the channel so you don't miss on future videos. Having said that, I also want to preface by saying I am not a financial advisor, and none of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. Alright guys, starting us off here with SPY on the 1 day, we do have this bullish shark pattern that generated back in March of 31st, and you completed the type 1 reaction on May 12th, where you are finding right now support above that target price range is closing above that T1 above 580.05. I did say earlier in the week that you were going to be between this range of 591-ish, 592, all the way down to 585. You did go a little bit lower than that. We did go as low as, believe, during the week at 580, 579, 578. But ultimately, every time you came down here, you always found support and started to break back above the high 580s. And then ultimately on Friday, you obviously did come down to that 583 range, but ultimately found a good momentum to the upside towards the end of the day, where you did go back as high as 591 before closing the day at 589.39. That could have been due to the end of month expiration. So what can we expect here harmonically? Looking at the volume here, you could argue that this is potentially a dragonfly doji, indecision candle, whatever you want to call it. I wouldn't call it so much a hammer candle because I would like to see a bigger spread on that body of the candle. So right now, this could be looking like consolidation above T1. In my opinion, if you lose 585, you can start looking towards 580. And if you lose 580, you can start looking back down to all the way to the terminal bar, all the way to 547, 546. There is a gap to fill here, right where the HSI dot is around 567.50. But if you ultimately get some momentum to the upside as I bring out the oscillators here, you can see that the HSI is approaching that midline. So in my opinion, if you start crossing that midline to the upside with volume to support that, I do think the next level you're looking at would be T2 at 605.66. But before that, I do have a few level of resistance before we get to that T2 target. I do have 602.48 and then 604.61. If we go over here to the weekly, you can see that this is an indecision candle, low volume. That could be the fact because we did have a short week. But we do have this bearish white swan pattern where you kind of completed the type 1 reaction, right, all the way PT3 here when we had that the bearish momentum to the downside during that time, and then we got that HSI arrow, and we're looking for the type 2 return, potentially OPR. The next target would be harmonically for the white swan here back to 613.23. Obviously, this is on the weekly chart. This might take some time to play out. If we look at the HSI, it almost reached the overbought conditions, but not the extreme. It didn't really actually get to the overbought conditions. Extreme would be above the blue line or at the blue line. You ultimately came down, and right now we want to see how we open up next week, as you can finally maybe start to go to that overbought extreme conditions, which could take it to previous all-time high, maybe even a new all-time high at 642.79. Obviously, it's on the weekly chart. It might take some time to play out, but ultimately what I'm looking at for SPY next week, I know there's a lot of lines here. You look to be, if you want to be bearish, I think, in my opinion, you got to go close below 580.05. If below 580.05, you start looking to test the 200 SMA, which is the intercept of the gap at 577. And then you do have this HSI dot retest line here, slightly where the 50 EMA is at around 571. And then you close the gap there around 567, just slightly above the 200 EMA. Below that, then obviously it gets a little bit more complicated. If we take this recent momentum here, guys, where we push down, right now you're currently finding support above the 236. So this, in my opinion, I know this is going to be a lot going on here, but in my opinion, this is the whole range where we've started to climb up. and make higher highs and higher lows, as it's evident here, right? Every time you came up here, you look, if you take a fib retracement, you look to be finding support above the 382 to 236. So any retracement we got back, we're getting it towards the 236 and even the 382. So in my opinion, for this to be back bearish, you need to start coming down here all the way back to 542, right at the 618, where you could flip the momentum back bearish, but we're so far above that. So right now we're looking again to lose that 580 target, and maybe we can start looking to potentially start looking at these the gap fill, and then maybe even the terminal bar. I do have 550.82, but right now we're still holding very well here. You could be establishing a range here before the next leg up. Obviously there's a lot of data to be looking forward to next week with the unemployment rate, non-farm payrolls, JOLTS, so that's going to be very important, especially because the Fed is watching that. So like I said, if you start looking to get momentum and closing above previous weekly highs, and you start looking towards that 600 plus range. If you cannot find support here, you can see also that the 13 EMA last week held above it. Price action actually continued to close above the 9 EMA. So if you start looking to close below the 13 EMA, maybe you come down to T1. 580 is where the 21 EMA is at, and then below that, if you get bearish data or something else comes out of tariff news, then maybe you can start looking for that gap fill. But if you, because you can see here, guys, all it's doing right now in this upwards channel is SPY creating higher highs and higher lows. So technically, you did create a higher low here, and you might be pushing for that next higher high. Obviously, if there's data is bullish, then you can start looking for that potential move to the upside again. So definitely keep a close eye out on the SPY. All right, guys, jumping over to the triple Qs here. So the triple Qs does have a bearish bat pattern that did form this week. Compared to the SPY, SPY does not have one, but it could be forming its bearish pattern. But right now, the triple Qs does have this bearish bat pattern on the daily. What was interesting here is that you did have an HSI arrow trigger here back on May the 21st. As you can tell that the HSI was completely overbought. You came down almost to the oversold conditions at the green line there. You did find support and you created a higher low, and then ultimately you went for that higher high, but could not close above the previous higher high. So what can we expect here harmonically? On Friday, you did generate also an HSI dot, which means that it's doing a previous check back, a price action back to the previous HSI arrow, which is between 523 and 511.24 was the low on that candle. And then on Friday, you did go as low as 511.93, but ultimately, just like the SPY, you're finding support above the 13 EMA and closing above the 9 EMA, similar to what SPY is doing. So you could argue that this is potential reversal candle. Volume has been increasing the past 3 days, closing below the previous candle day close. You do have an HSI dot retest line, so that's again 511.93, 511-ish is what you're going to want to lose if you're going to play out this bearish bat pattern for the type 1 reaction. A type 1 reaction would be all the way to 479.08. As I bring up my support levels and lines here, if you do start looking to get rejected at the HSI midline and with volume increasing, the next level I would be looking at would be 503.52. Obviously, that's where you also came down as close over here on Friday of last week. You went to 505.58. If you lose that, then in my opinion, you could start looking for that type 1 reaction to 479.08. You are going to have a level of support here at the 21 EMA of 507, and then a bunch of support here between 495 and 487. If you find support here and the HSI midline breaks to the upside with volume to support that move, in my opinion, and if you close above XA here for 1 to 2, 3 candles above 525.03, the next level you're going to be looking at would be 549.70 and then hop at 560.33. If we go over here to the weekly, you do have a bit of resistance here at hop at 529.73. You did go as high as 526, but you still close above the previous candle close off of decrease in volume, but not by much, even on a short week. So right now the HSI is almost at the overbought conditions. It did curl down, but hasn't even reached the overbought conditions, in which case it has gone before to the previous extreme case scenario here. So the extreme case scenario that last time where it did go was back over here, and you saw what the market did during that time, and that was towards March. But right now it's still unclear yet. Obviously there's a lot of data to look forward to that, so definitely keep a close eye out on the triple Qs. All right, guys, jumping over to the diamonds here. The Dow Jones on the daily, no current harmonic pattern has formed. So we're just looking at here just at these EMAs and SMAs. You can see that the resistance level has been at the 200 SMA denoted by that red line, just slightly above that HSI dot retest line around 425 and change. So what's interesting here about the Dow Jones is that the Dow Jones on the EMAs, you're about to get that golden cross. But something that I would like first for the Dow Jones to be above is that 200 SMA. Anytime, in my opinion, that you have a EMA crossover to the bullish side or to the bearish side, you want price action. You want price action to be above all these EMAs or that strength, right? Right now, yes, you're gonna get a golden cross, maybe even to next week, a few days, if you start pushing up. But if resistance is at the 200 and you're not able to break above it, that could be potential bear trap, or excuse me, a bull trap. So I want to see price action be above all the major EMAs here that you're looking for, SMAs as well. And then if you get that crossover, because we know that the EMAs, the crossover strategies could be lagging indicators, but in my opinion, at least for those strength, you also have this, you could argue here, a left shoulder. This would be the head and this would be the right shoulder, with your neckline being just right here with that HSI dot retest line. So one could imagine here that if this is a true inverse head and shoulders pattern playing out and you break above the neckline, which is going to be above your HSI dot retest line, that would also break above the 200 SMA, where price action is above all major EMAs, and then you get that crossover strategy, that golden cross, to potentially start playing out that inverse head and shoulder back above these targets here, where I do have 435 and then 442, and then obviously you're looking for much higher there at all-time highs. So obviously for that to happen, you need a lot of volume to come in to suggest that. So that is interesting here that you do have that pattern formation here with that inverse head and shoulders approaching with that golden cross as well. You do have a gap to fill here, just slightly below the 21 EMA there, around 418.11. So if you're looking for downside here, you need to come close below 420, fill that gap, and then see if the 200 EMA, 50 EMA around 416 holds. If not, then you're looking at 412. Below 412, then you can get more bearish to the downside. If we go over here to the weekly, we do have this bearish, I believe, ABCD pattern where you are struggling to stay above hop here, but very close to hop. So if you fell hop and you're looking back again to the 50 EMA there around 413, like I said, 412.35, you start looking for downside targets back to 407 and lower. So right now, to me, in my opinion, the Dow Jones is kind of consolidating, waiting for that potential inverse head and shoulders pattern to play out. Obviously, that's going to be, if that's going to be the case, then you need to have bullish data come out and bullish momentum in the market. So definitely close eye on the Dow Jones, because this could be an explosive move to the upside if you do get that breakout. So keep a close eye on the Dow Jones. All right, guys, jumping over to the Russell 2000 IWM here. Very similar setup to the Dow Jones, with the exception that it doesn't have a golden cross on the EMAs. It's still far away from that, but it does have this head and shoulders, inverse head and shoulders formation here on the daily. You can look at the HSI dot retest line to be that neckline at 206, or even higher here to where you got rejected there around 208 and change. So we do have a bullish harmonic pattern on the daily here. You can see we had that crab pattern, but this obviously failed. Obviously, we're not looking so much at this pattern playing out because you did fail hop level. So, but we can look at these targets as levels of resistance should it climb up to that T1 target. So right now, you have this HSI dot retest line where 206 seems to be resistance here. You're not able to close above it. You have another HSI dot retest line around 208 right below the 200 EMA. So if you're able to break above that, then you start looking at 213.70, the 200 SMA there at 215, and T2 at 220.19. Next level I do have, if you lose IWM level of support here, key level of support in my opinion is at 201.99. Below that, then you start looking to come down to potentially hop at 196. Volume is increasing on the daily here, approaching the midline similar to the other ETFs. If you go to the weekly here, what's interesting about the weekly is you do have this HSI arrow that did generate off an indecision candle close right on the weekly, but it is off a decrease in volume. But again, that's due to the low volume, but you did generate that HSI arrow. So that HSI arrow is going to be very important to see if you just find support at that $200 range. Maybe even you come down here to that 200 EMA, which is at 196, and then find support for another leg back up. If you fail, you start looking potentially, if it starts going for the HSI arrow to the downside all the way to the oversold conditions, you could come back all the way down to T2, maybe even lower, but that's unclear yet. If we take a fib retracement from the previous highs here from November all the way down to where we retraced, you can see that price momentum was starting to break above the 50% retracement, but is not able to hold. So in my opinion, the 382, if you lose this level, you might be able to come back for potentially a new swing impulse wave, right? So you would create a new lower low and then maybe another corrective wave move back up, but that's still unclear. You're in an indecision candle off the weekly close, so definitely keep a close eye out on the Dow Jones. Jumping over to the financial sector ETF, guys, here XLF currently has this bearish bad pattern similar to the triple Qs. You can see that the HSI arrow did generate here right at the completion of the pattern. You did come down, but ultimately find a support above CD, which is the previous harmonic target off the dragon pattern. You did form an HSI arrow to the upside and are now starting to get volume to increase. The past 2 days, it is volume increasing. So you did have just a bearish day here on Wednesday off of low volume, and ultimately Thursday you closed the previous high, and then on Friday obviously with the momentum that the market got. So right now you are looking to approach that midline. So a few things that can happen here if this is going to actually break to the upside. The next level you want to break above is XA here at 51.45. A few candle closes above here, then you can start looking for that hop at 54.10. One thing that can happen is if you approach that midline and you get rejected off the HSI, which is going to be your XA. Let's assume this happens here. You touch XA. That is a potential double top in information. As you can see, this is an M here. First peak there, it came back down. This could be double top. And then you start looking for that type 1 reaction to either T1 or all the way to T2 at 45.86. If it goes down to T2 45.86, you ultimately break the momentum back bearish from this whole range that it just got. So even if it does kind of T1, that still be sufficient enough for a small retracement, and then you can get more liquidity down here for the next leg up for a potential type 2 return to hop at 54.10. But if you break above XA here, guys, if you break above XA here with volume suggesting that volume is increasing, you break above that midline and you close above XA for a few candle closes, 2 to 3, you can start looking for a potential new higher high and ultimately new all-time high at 54.10. If we go over here to the weekly, you do have an inside bar close. So you do have a range now. The high is 51.77 and the low is 49.57. If you are able to close above that mother bar there, the high 51.77, then you could start looking for that hot target at 54.41, new all-time high or previous all-time highs. If you close below the mother bar's low range at 49.57, you can start looking more bearish there to 49.18, and then ultimately on the 50 EMA at 47.19, and then there is a gap to fill there around the daily, just slightly here. So that gap gets filled at 47.28. So definitely keep a close eye out on XLF. All right, guys, jumping over to XLE here, the energy sector ETF. No current harmonic pattern generated on the daily yet. So what can we expect here for the ETF? I do have a level of resistance at 82.51 where we're struggling to stay above it. So we do have a potential pattern formation playing out here. This could be an asymmetrical triangle. So an asymmetrical triangle, depending on where you are in the range, could form at the bottom of the range, which could mean continuation. Or if you put it on top of the range, if it is on the top of the range, it could mean a continuation to the upside. So this one right here, since it's kind of losing momentum here, you could argue that this wasn't a bear flag here, right? If we draw it out like this was a bear flag, potentially still is a bear flag, and that flagpole would obviously bring it down. There is a gap to fill around 73 and even more downside. If that pattern formation plays out, you could draw potential targets here from the top of that asymmetrical triangle and the flagpole. You bring it down to the breakout. So this would be calling out to back down to 61. Obviously, this would be very bearish for the energy sector. If we look over to the weekly, maybe you could suggest that there's also some targets down there. So if you look at the weekly, you are in a range here where the HSI retest line is around 92.33 and 75.75. So that's the range you've been in. You are losing some momentum here. Harmonic targets here back 67.27. You never really tested that level. This obviously is past the 30 bar rule, but you can look at these levels of support. Should it lose that HSI retest line and you have gaps to fill, I'm just trying to see if there's a harmonic target or harmonic pattern that popped up. It hasn't popped off yet, so very key important level here to watch out. Volume started to increase here. HSI kind of curling up towards that midline. Maybe it's starting to see if this is going to break out or not. So definitely something to watch out for, because of this formation, you could argue that the bear flag is starting to play out so far, or if this is the symmetrical triangle for continuation to the downside, it could be a very deep retracement. So definitely keep a close eye on XLE. Jumping over to Apple here, guys. So Apple on the daily currently has this bullish decrab. You can see that it completed the type 1 reaction, is currently just struggling to stay above the T1 target there at 203.93. So what can we expect here harmonically? HSI approaching that midline, just like all the ETFs and they are approaching that midline again. Key levels to watch out for. I do have a level at 198.93 where it's currently finding support here. So you could also argue that this is a M formation as well. Double top, obviously a double top formation. Just a double top formation here is a bearish formation. You can play this to the downside of the neckline if you lose that neckline. In harmonics though, an M formation is ultimately seen as a bullish reaction. But you do need to break down, depending on what pattern it could be. It could be a bat, gartley, shark, crab, whatever it is, an M formation. Ultimately, you would make a lower leg D. This would be X, A, B, C, and then D. That's a 5-point structure in harmonics. So if you come down here for that lower leg D, then you would expect harmonically for a reversal. So to be generated a bullish harmonic, and you're looking at the retracement to T1 at the 382 and T2 retracement at the 618. Obviously, we have to wait to see if that breaks down below that neckline to see if there's a harmonic. Obviously, it has to follow a strict Fibonacci sequence to make up whatever pattern it's trying to form. So right now, the volume on Friday, obviously high volume. Trying to see if this level holds for 198.93. If you're able to climb above 203.93, then the next level you could be looking at would be at 207. There's a gap to fill, a little tiny gap to fill there, around 209.77. Above that, then you're looking at to complete all the way down to T2 at 225.38. If you're not able to hold support here at 198.93, then the next level I want to look at again would be that double top neckline formation at the HSI retest line. If you fail that at 193, then you can start looking at 188 and maybe targets back down here to potentially type to return a hop. Obviously too early to tell, but those are the things that I'm watching out for on Apple here. Apple, the weekly inside bar as well. You have your range here. You can get bullish above 209.48 to get out of that range of the mother bar, or if you break below 193.46, you can start looking at downside. 193, again, not a coincidence, guys. If you look at the inside bar of the weeklies, that low is calling 193.46. Why I say you can go bearish if you close below that with volume to support that move, because that is also a key level here with the HSI retest line at 193 and change. So below that, then you can start looking at targets to the downside. So definitely keep a close eye out on Apple. Jumping over to Microsoft here, guys. So Microsoft on the daily currently does have this bearish decrab. This formed after earnings. So something that I just find out quite interesting here that I think could happen potentially, right? This is just my opinion only. This is starting to look very similar to what's going on here right now with the patterns that have formed on the ETFs and the blue chips, with their bearish patterns that have formed and are currently just slightly rejecting the XA target. Similar to what happened here with Microsoft, right? You had a struggle here below XA, found support above it once you broke above it, and ultimately went to hop. So right now you have similar setups on the ETFs and some of the blue chips that have formed their bearish harmonic target. Obviously, you have not broken below the 236 or 382 off the retracement from those recent swing highs that we just got. Right now, Microsoft completely got some big volume to the upside here, struggling above hop, but completed the hop, the return to hop before you actually came for that type 1 reaction. The HSI, what's interesting here, you were overbought here, and you did form the HSI arrow, came all the way down here, and ultimately tried to come back to the XA target, but failed and pushed back up higher, where you did form an HSI retest line, which means it was doing a previous check back of that previous HSI arrow and even the previous HSI arrow over here, but now you're closing above it. So this could actually push maybe even higher. I do have the next target here at 462.38 and previous all-time high target there at 468.35. there is a support line that I do have that I just crossed above at 457.26. So below that, and if you do find resistance, you might be looking to XA and then finally playing the type 1 reaction. Obviously, you did form a golden cross here, and that could be the reason why we're continuing to push up here. And the golden cross on the SMA is also approaching here. If we look at the weekly here, the weekly, if you take this whole range from its previous all-time high to the retracement the market had off the tariff news, you can see that the break above the 618 was bullish. You broke above and went to bullish, and now you're looking at previous all-time highs. You're looking at the full, complete 100% retracement to the 468.35, and above that you have the 1272 at 501.77 and the 618, the 1618 at 544.28. Obviously, that's bullish momentum to the upside we need with good data and everything going back to normal. But this is interesting to see that Microsoft is coming back to test at least 100% retracement of its previous all-time high from the rejection that we just had from the tariff news. So what I'm looking here for Microsoft, looking at the HSI, if it breaks that midline, that could be towards hop. If it breaks above that midline and hop, then you're looking at next all-time high, previous all-time high 468, and previous targets here from the Dragon 468. And then 499, call it 500 for that psychological level. If you find resistance here at hop, then you want to lose 460, come back below XA. In my opinion, below 433 could start its type 1 reaction to 403.32, but we're still away from that happening. So definitely keep a close eye on Microsoft. Jumping over to Amazon here, guys. So Amazon, bullish harmonic pattern on the daily. We have the shark pattern. Also very similar looking to the Dow Jones and IWM, with that inverse head and shoulders here potentially playing out. One thing that's a little bit more, we could lean more bullish here on compared to the Dow Jones, is that the EMAs have just gotten that golden cross. So that golden cross breakout, your neckline is still here for that inverse head and shoulder, where the HSI dot retest line is around 204. If you start playing that out, you get that breakout, you're looking for that T1 219.98 and then T2 at 237.38. If this ultimately is a false breakout and you fell below 201.20, the next level I'd be looking at would be the terminal bar there, just slightly where the golden cross is at, around 197.67, right where the entrance of the gap. And then you come down here for that gap fill at 191.16. If you fail that level at 201.20, you could come back down with this range here where I do have that 201.20 and 188. Below that, then obviously you're looking for more downside. So HSI kind of curling down below the midline. Maybe looks like to consolidate here, wait for the data to suggest. If it is bullish, then you look for upside. If it is bearish here, you get rejection and come back down to fill that gap and maybe test some levels to the downside. So definitely keep a close eye out on Amazon. Jumping over to Tesla here. Tesla on the daily currently has this bullish bat pattern. You can see it completed the type 1 reaction in a clear upwards trend, creating higher highs and higher lows. You are closing below the T1 target there at 348.44. So what can we expect here for Tesla? We bring here Tesla here, you got the rejection there at the HSI midline. So you're looking right now to create that higher low. If you fell below 3830, then you might be looking for some downside targets here to fill the gap. There is a gap to fill around 309 and change. And there's another gap up here around 340, 318, where you could fill the gap and then maybe find support above it. Like I said, some of the major ETFs and blue chips are finding support above the 13 EMA and still closing above the 9 EMA. So Tesla, I think, is still closing. If we zoom in, just at the 9 EMA. So this could find just support here and make another higher high. So right now the oscillators on the HSI, you didn't test that midline, but fell in midline and coming back down. Ultimately, that could be just creating that higher low for the next leg back up. In my opinion, right here, what's important, if you take a fib retracement from the previous all-time high, guys, right here, and this is a very important line in my opinion that you should draw. I do have a target at 383.76 that you got to break. This, if you break that, I think you have major upside here for Tesla to test the $400 range and the previous all-time high. And I say that because if you take it for retracement from the previous all-time high here to the retracement that we got, look where the 618 is at, 383.76. If you're able to break above that, this whole range from this previous all-time high to the push down we got, that means you're making a bullish move to the upside, you're breaking the momentum back to being bullish. In my opinion, 50% is pretty good to hold above and break above and hold support, because you just pretty much the downwards movement, the downward trend that the market initially dropped Tesla down to, you're ultimately breaking. At least it gave up half of that wave back up 50%. So you're slightly just below the 50%. But like I said, if you're able to break above the 618, that just gives you confirmation that the momentum has officially, from the all-time highs to the most recent downtrend, has shifted the momentum back to being bullish, and you're looking to make higher highs and higher lows down the line. So very key level to watch out for 83.76 for Tesla. There could be a shot that maybe you come back down to the oversold conditions on the HSI, which could be down to the 200 SMA even, where there is a gap to fill. If we also take a fib retracement from a low over here back in April to the most recent move that we had, where we created higher highs and higher lows, we got a bit of resistance here at 367.71. So if we assume at this range here you are finding resistance, and you go all the way down to the 50% retracement, which would fill that gap there at 306 and change, you would still be closing bullish, right? It's a healthy retracement even to come back down to that 50. But if you break down to 618, in my opinion, which is around 278, where there is that little tiny gap to fill there, if you come back down to those levels, you officially lost this momentum, the bullish momentum right here from April to the end of May here. If you go below 278, in my opinion, then you start looking for downside. But we're still far away from that level. So right now, the level to watch out for, just next level here, would be 236. You find support, like I've said, the 236 and 382 could be levels of support before the next leg back up. So we do have obviously Harmonics up here. T2 is at 401.94 for the next level back up. Like I said, I do think it's going to be a very big level here at 383.76. If you're looking above that, then we're looking for new all-time highs out on Tesla. So definitely keep a close eye out on Tesla. Jumping over to Google here. Google on the daily currently has this bearish Gartley pattern. And as you can tell, it's very similar looking to Microsoft, which is holding true so far. Not every pattern works out the same way all the time, guys. This is just what I'm noticing right now. Like I said earlier, I mentioned that Microsoft formed a bearish deep crab on the daily after earnings. You also formed it here for Google, a bearish Gartley after earnings, and look what it's doing. And never came down with the rejection of the completion of the pattern here at point D. You came down for a retracement, but just to create higher highs, higher lows, ultimately closing back above XA. You had a few candles, closes it, then you hit hop. So right now for Google, you're in this range between 176.55 and XA. So in my opinion, for this type 1 reaction to play out on Google, for T1 at 158.34, you need to lose XA at 167.60. And what you did on Friday is that you came down to test it and you formed that hammer candle off of high volume. The HSI is approaching that midline, but that could curl back up. If you break above 176.55, there is a small little tiny gap to fill here at 178.89. If you break above hop and fill that gap, then you start looking all the way back to a bigger range here towards 193 and getting back above 200 down the line. If we go over here to the weekly, you see that this resistance at the 50 SMA there with the indecision candle. So if we draw a fib retracement, we're still a little bit far away from actually shifting momentum, but not far, right? You are finding resistance, and this is again just fib retracement, guys. Simple fib retracement. Take some fib retracement from previous swing high to swing lows, see where we're at. 50% gives us a potential chance of flipping the momentum bullish. 618 confirms it. And you start looking for highs, higher lows. Same thing could be said about the opposite direction from swing low to swing high. If you go to the 50% retracement, momentum could be shifting bearish. And if you go to the 618, the momentum has shifted bearish with confirmation, creating lower lows and lower highs. So we're looking here at Google. Resistance at the 50, 2 wicks, right? Resistance. It's trying. The market is trying to figure out, should we break here or not? Are we going to get rejected? Because you could get rejected here. You can get rejected if you don't break above this momentum here, above the 618, above the 50%, where you can come back down to create a lower low. This is obviously on the weekly. It could take some time to play out, but it is trying here. Google is trying. If you manage to close above 618, the momentum has officially shifted bullish, and then you can start looking at targets to the upside just on the fib retracement at 192, which is very similar level to what I have, 193.70, and then you got some harmonics down to play out to the upside. So if you get rejected, then obviously you're looking back. If this starts a second impulse wave, because this would be the first impulse wave corrective move, first impulse wave corrective move. If that fails, then you could be looking at a second impulse wave to the downside and then a corrective move, maybe at the 50, maybe somewhere below. So too far to tell. We have to wait to see what happens here. But if we go over to the daily here, targets to the downside, I want to mention here, for you to get bearish on Google, in my opinion, you need to close below XA at 167.60. Below that, then you have the 9 EMA, the 21 EMA at 166, where the 50 EMA is at 164. And then you complete a type 1 reaction at 158.34. But right now, the candle close above on Google on Friday was high volume. On the month expirations, I know, but it is high volume. We'll see if that actually holds true into continuation into next week. If not, then you have your target where you can get bearish below Google. So definitely keep a close eye on Google. Jumping over to Meta here, guys. Meta on the daily currently has this bullish bat pattern. Completed the type 1 reaction here on the 12th of May. And since then, it has held support above T1 624.97. There was a lot of buying pressure here with very little selling. You did have some on Thursday, Friday. You had huge amounts of volume coming in, and that could be due to them closing the end of month expiration. So what can we expect here harmonically? I do have a level of support at 636.27. The next level I'm looking at for this pattern to play out all the way to T2 is at 669.24. Above that, I do have a level at 732.89, and you could test previous all-time highs. Above that, then I have a new all-time high at 863.65. So what's interesting here for Meta compared to the other blue chips, it's one of the first blue chips and and compared to the ETFs as well, that has crossed above that midline. In my opinion, Meta is a strong stock. Be very careful trying to short it here. Crossing that midline, what happens if it goes to the overbought conditions? If it goes to the overbought conditions, I don't think it's a T2 at 669.24. I believe it's even higher. That if it does go to the oversold or overbought conditions, that could be closer to the 886, around 711. Just call it that 700 plus psychological level. I am looking at here to see maybe there is a shot too. You want to see if volume rejects there too with high volume around where that first peak was, and maybe T2 a rejection there with high volume, which could create a double top, right? And you would have a double top here, somewhere around here, and that could be an M formation, which ultimately Harmonics, it is a bullish reversal to the upside again, but not before making a lower leg back down. But you have to wait for the volume to show you that. So right now I do think Meta is a bit strong here. The next level to the downside, should you fail here, it would be 636. You come down to T1 624, then you can play a range here back down between 636 to 604. Below 604, then you can start looking at 567. So definitely keep a close eye out on Meta. Jumping over to Netflix. So Netflix on the daily, geez, been saying this for the better part of the year, earlier in this year, that Netflix very, very, very strong, continues to make a run. A lot of buying pressure here, very little selling. I had a level at 1214.92 for the next all-time high, and we did go to $1,215.91 on Wednesday. So what can we expect? No harmonic pattern here. There is a shot that maybe it's forming a bearish dragon pattern, but you need to get rejected here. We'll have to draw it out, but that's what I see just by visually looking at it. So what can we expect here? If you break above the 1214.92, the next level I have for a new all-time high, this is going to be the 2618 from its previous all-time highs. If you take a fib retracement from where we had this black swan from point C to point D here, you can see why I have that level as a new all-time high. That's a 2618 at 1458. Every target that I have drawn here for Netflix has come to fruition. That 1618 at 1214.92 played out, 1033 played out, and even before then. So you did have this bullish black swan on the weekly where you broke above PT3, and even if you take down the fib retracement from C to D, like that's your next target would be 1400 plus. I know it's a crazy number to say, even with this whole continuation to the upside, but look at the HSI. The HSI is currently just flatlining below the overbought conditions, and not even at the extreme yet. The RSI is just above the 70 range there, so it is oversold. But to me, I give more weight to the HSI. So if the HSI says more upside, you could break still to the upside even higher before shorting this. I would not want to short this right now on Netflix because this the volume keeps on coming in here. There's no selling pressure, continuous selling pressure here on Netflix. Until you get some confirmation, I would be very careful shorting here Netflix, because this can continue pushing to the upside. So watch out for Netflix. Jumping over to NVDA. So NVIDIA on the daily, bearish bat pattern form similar to the triple Qs. What's interesting about that is at the beginning of the week, the NASDAQ tech sector, very strong in anticipation towards NVIDIA earnings, but then you had quite a bit of sell-off at the end of the week. Specifically also for ARM, you did sell off and NVIDIA also sold off. But ultimately, all you did that sell-off for NVIDIA is just to close that gap that generated from the positive earnings that they released. So harmonically, what can we expect here? Completion of the pattern, point D here, you generated an HSI dot, which means to tell me you're going to retest a previous HSI arrow, which is right here and even right here. So is it starting its type 1 reaction? That's the question we got to ask. High amounts of volume could be a sign, right? There's 2 candle closes below XA, but that high amount of volume, you have to also consider why there's a high amount of volume. Earnings, right? So we want to see another day or two, maybe confirmation, maybe even losing this HSI dot retest line at 133. Below that, then you have the 200 SMA, which is at 126, and then you can start looking at T1 at 121.77. What does the HSI tell us right now? You did get rejected. You're trying to approach that midline. You didn't really get to that midline, but did curl down. If you go to the oversold conditions here, I do think that is going to be your T1 at 121.77. So if you draw a fib retracement, because this would be right your first wave up corrective move, and then you found support. If you take a fib retracement from this point C here to this whole range, right, you could see that the 50% retracement, which would also be a gap. There's 2 gap fills to fill here, T1 and then one slightly below T1, right where the 200 EMA is at, right below 200 EMA. That still will consider a corrective move, a small corrective move for the next leg back up before more upside. So not even worried, even if NVIDIA comes down to fill that gap here, even loses a 200 EMA slightly, and if you find support there and you get volume back up, you're going to come back again towards that XA and then hop. If, like again, the 13 EMA is holding true, which you come down to, but the 9 EMA you end up closing on the day at the end of the close. If that is true here and you find support, then again, that XA target is going to be for those patterns that are forming on the daily, those bearish bat patterns or bearish crabs, whatever bat pattern, whatever harmonic pattern on the daily is forming, your XA is going to be your key target. If you're at it or below or above it, what's important, it's going to be if it holds. If you're above it, if it holds, you're looking at hop, the next leg back up. If it's below XA and you have volume to support that move, then you're looking at your T1 reaction, your type 1 reaction. So right now, NVIDIA, because it's earnings, after earnings, volume, heavy volume coming in, I want to see what's going to happen between Monday and maybe Wednesday to see if volume slows down like it did before earnings, right? If it matches the average volume before earnings. And if it does climb back up, like I said, then I'm looking at the next target here at 144.71. Above that, then you have 154.38, previous all-time high, and then 157.76. So like I said, if you lose 132.66, then maybe you start your descent towards that T1 at 121.77. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here, guys. So Bitcoin, no current harmonic pattern forming on the daily, and that's also depending on what exchange you're using. So right now I am using the Binance USDT exchange. So there is a bearish shark pattern that has formed recently on the Coinbase exchange. So because I have more levels here drawn out on the Binance exchange, normally why I track Binance, because, and this could have been changed, this could have changed since I started looking at it, but Binance used to have the most amount of volume coming in, right? Selling back, buying and selling back and forth. That's why I track Binance, but maybe Coinbase has now been the more volume coming in. I'm not sure, but this is what I track for me on Binance. but I will be going over just to look at the shark pattern, bear shark pattern on the daily on the Coinbase as well. But I want to cover here the HSI dot, or the HSI arrow that did form on Sunday here. So we're looking for the next leg back up because they did create higher highs, higher lows. I have a level there at 113.866 as the next level for a new all-time high. You did get close to that as 111 and change, so you missed it up by 2K. If we go over to the weekly, you have an HSI arrow starting to form right now. Obviously too early to tell if that's going to hold, but if it does come back down, the next level of support I have is at 101.09. Find support there, then you can look at the next leg back up. So I'm going to jump over to the Bitcoin USDT Coinbase exchange here. You can see that there is a bearish shark pattern. Like I said in my other the other Binance exchange, I have a target at 113K. So we're gonna see if there's some targets here. There is one at 114, so not off by much. You did form the HSI arrow as well here for the Coinbase exchange. So what can we expect here off this shark pattern? If this HSI arrow is going to form, you want to obviously close above the midline. I believe that's going to be your terminal bar. So your terminal bar, if you break above it with bullish momentum, then you can start getting bullish above that for a new all-time high at 114 and even way higher. If you get rejected here and you maybe get a 921 crossover, volume starts to pick up to the downside, then you could retrace potentially back down to T1 at 93K. Obviously, we're gonna have to wait to see if that is the case there. If you draw a fib retracement from here to here, you're currently at the 236. Again, very similar to the blue chips and some of the ETFs from the whole range that they've just recently been on this run. So if you do break again below the 886 of this pattern, you might be looking for that type 1 reaction to T1. So if you break above the 886 guys at 105K, then the next level you want to break above would be the terminal bar, like I said. So the terminal bar, you can make a higher high towards 114K plus. So in my opinion, also there is a possibility that you can be stuck in this range between the terminal bar at 114K and the 886 at 105K. So right now it looks like a potential false breakout, obviously too early to tell. So we're going to have to see what Bitcoin does from here. If you get rejected, you're looking for that type 1 reaction. If you get back above that range and break below terminal, then you're looking for a higher high and a new all-time high. So definitely keep a close eye out on Bitcoin.